Hello, in this presentation, we will process payroll in our bookkeeping problem in Excel, keeping in mind how the same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We will first take a quick look at QuickBooks and then jump over to Excel to enter this data within Excel. We will be processing payroll for the second month here. In order to do that, we're just looking at a snapshot of the QuickBooks homepage. We would be selecting the Pay Employees. Remember that this is a little bit different if you're using QuickBooks, that there's at least three different pay options for payroll and a free option. All of them will look a little bit the same, meaning we're going to have to process payroll and calculate the withholdings in some way. When we actually process payroll, the more advanced systems will do more of the calculation of the payroll. The actual manual process of calculating payroll is good to learn the process, but if we have a lot of employees, especially if there's different states, then it becomes much more complex. We're going to just be running the federal payroll. I'm getting really the concept of what it is to have deductions within payroll, looking at the federal Social Security, the U.S. federal Social Security, Medicare, and federal income tax withholdings through this process. So to do that, what we're going to do in QuickBooks, we would just have to enter this data, meaning we'd have to have the dates of when we're processing this. So this is the pay period ends and the check date ends. So when we say the pay period ends, that means whatever pay period we have. So it could be a week, it could be bi-weekly, it could be semi-monthly, or monthly, as it is here, monthly. Then we have the check date. This does not necessarily, and very often is not, the same date as the end of the pay period, although it could be, but it could also be some date after. So that's going to be one of the key components that we will need to have in place. And then we're going to have our two employees down here that we will be processing for. We just check those off and then go forward. Now we're going to have to enter the data here because it's not going to populate itself because we don't have the type of system that's going to populate it. We're actually going to go in and see what is happening and put in those deductions, meaning deductions related to the taxes and the withholdings. So we'll do that one by one. First, going into Atom. This is the system you'll see, and when you double click on a check, this is in essence what you'll see. Will basically be what is on the check stub as well. So this is a salaried employee getting $4,553.33, and that would be the gross pay. Then we have to calculate the net pay. And like I said, we're just going to be taking out the federal portions of this. So we're taking out the federal income tax and the Medicare and the Social Security, the things that every state within the U.S. has to do. And we're going to use an approximation on the rate. The rates could change. So we want to get the concept of what the withholding taxes are. And then whatever the rate is, we can apply that to our current point in time. But the concept for taxes is all the same. So a lot of times we think taxes are changing all the time, and they are. The laws are changing all the time, but there's nothing really new under the sun in terms of taxes. As with most things, it's just changing the rates and how it's going to be done. So tweaking things a lot. So we'll learn how the process is, and then we will apply that. So we're going to say that the salary is here. Federal withholdings is 720. Remember that federal withholdings is the most complicated portion if you were to calculate it by yourself, and one of the major reasons we would want a third-party payroll or the QuickBooks system to be calculating that, and that's because we do need a couple factors to get that. We need to be having the marital status and the number of exemptions, and of course the pay range, meaning we pay monthly, and then we could look that up in tables and figure that out, but it's really nice to have a computer system do that for you. And then we have the Social Security and Medicare, and these are actually more simplified processes. They are typically flat taxes. Now the rates could change over time. Law is always subject to change, but they're more of a flat tax, which is nice and easy, where we just take the 4583.33 times. In this case, I think the Social Security was 0.062, 6.2% or 0.062. So we might not be using the exact number, but yeah, it looks like we are actually. So 284.16. So that would be an easier one to calculate. And then the Medicare would typically be an easy one to calculate too, as a flat tax, 4583.33 times, I think it's 1.45, so 0.0145, 1.45%, and that would give us the 66. So those rates and those calculates, not the most important thing, but it is important to know that we will be withholding those from the employees, meaning the theory is, of course, that the employee is paying these taxes, not the employer. The employer is just taking them from the check, giving the employee the gross pay, the net pay, which is the gross pay of this, minus the FIT, federal income tax, Social Security, and Medicare to get to that. So this is what will actually be received by the employee, but the employer does not get to keep these. They then have to pay them back, so it's not their revenue in essence. It's just it's going to be a liability. So it's important. It's one of the most complicated journal entries because of the withholding. So it's a good one to understand. No matter how we do the payroll, we got to enter this journal entry somehow, and we have to reconcile these items at the end of the year. So it's really important to do that, and so it's good to get an idea of these. Okay, so then we have the employer portion. These are paid by the employer and are unusual for taxes because they're not paid on employer earnings. They're paid on employee earnings. And it's kind of set up like a 401k plan or matching type of plan in that where basically the employer is paying the same amount in Social Security and Medicare. So the 248.16 and the 66.46 are the same for the employer and the employee. These are being taken out of the employer's account and not taken out of the gross pay. So we'll see how that it will be input into Excel, and it'll make a bit more sense. Note here, once again, we're not taking out state taxes because they will differ, although they'll mimic many times what we've done here on the federal side. And we could also have other things such as a 401k plan or medical deductions. Those types of things, or garnishments, or most of those things are going to be benefits. And notice that they're things that the employee, of course, has a choice as to whether they want to participate in the 401k plan or the medical and whatnot, whereas the withholdings for taxes is mandatory. Let's take a look at Excel. Here we are in Excel. Before we do the journal entry, typically we will go and we'll enter this data into our data into just a table and figure this stuff out and do the calculations once again. So I'm just going to go to the right. I'm just going to keep on going to the right till we get to our payroll, basically our subledger for payroll. We're just going to go all the way to the right until we find that, taking the scroll. We got the payroll register. It's in columns DH through DO. And we had our last register here for the dates of the month of January. And I'm just going to copy this entire thing and paste it down here, and we will do this one more time for the new data. So I'm going to put my cursor on DH2. Just going to highlight from DH2 all the way through to DO8. DH2 to DO8. And then we'll let go and we'll right click on that selected area, and then we'll copy that. And we will put that underneath in DH10. So we're in DH10. We're just going to right click and paste regular, not 1, 2, 3, because then we won't have the nice blue on top. We're just going to paste the regular first item, and everything will then be there. Then we gotta delete the data. So I'm just going to delete all the data, and we could probably keep this. Let's delete the totals. We'll redo the totals as well because that'll be fun. And delete that. And then we're going to change the date range. We need the month of February, so it's going to be 2/1 to 2/28. So let's see if we can just double click on this and change the last number to, I'm just double clicking on it and I want to change that, actually, this to a 2, representing the second month. Okay, I didn't like that. What I'm going to do here is I'm going to put that and a 2/1. And that's right next to the enter sign, so you want to select that. And that tells Excel that you just want it to type exactly what we put in there. So when you select enter, it goes away, and it gives Excel that command basically to just type what we put in the cell. I'm going to do the same thing here. I'm just going to delete the whole thing. I'm going to put that, and I'm going to say 2/31, or 28, I should say, and enter. So there we have it. So there's going to be our dates. We could have obviously changed the date format too if we go to the Home tab and we go to the numbers and go to dates. But it usually gives the whole date, including the year, and I just really want the month and the day. is all we need at this point. So either way. In any case, now we're going to go back down here. We're going to put our information, same information we had before. We're going to calculate. We're going to say Adam Hamilton is a salaried employee, and he's going to get 4583.33. We'll take off the 3 3s for our, because we're not going to put the pennies in, so we haven't been for the whole problem. And then Social Security, I'll calculate this out, but if it's not exact, we'll round it out. Now remember, Social Security is going to be an easier calculation because it's going to be a flat rate typically. Now there's a couple exceptions, there's a cap on it and whatnot. We won't get into that now. We can talk about that at a later point. But it's basically just going to be taking the total earnings times some type of rate. That rate typically, right now I believe is 0.062. So let's see if that's what we're using right here. We're going to say this equals this number, total earnings, times 6.2%, which is 0.062. And enter. So that's 284 looks right. And then Medicare, we're going to do the same thing. It's the same thing in that it's a flat rate. So we're going to take the total earnings times the flat rate, which currently I think it's 1.45. So that's what we'll try, which is 0.0145. So we're going to say this equals that number times 0.0145. And that gives us 66. That's what looks good. And then the income tax, that's the income tax that gets paid at the end of the year. That's what we actually think of when we file a 1040 at the end of the year tax return in the US. And that is the complicated one. So we're not going to go through the tables to show how to calculate that. But you do need, if you had the tables, you would need the number of exemptions. You would need the date, how often we pay, monthly in this case. And you would need the marital status to find the correct tables. And then the total earnings amount. In order to find the amount, we're going to put in 720. And then we're going to have the net pay. So what are they actually going to get? What is the employee going to receive? Well, they would have got $4,583 if it weren't for taxes, but then we took out $284 for Social Security, Medicare is $66, and income tax of $750. So we're going to take these total earnings minus these three taxes. If we did that with a calculator, then it would simply be 4583 minus 284 minus 66 minus 720, enter. And there we have it. Let's see if we did that right. Let's do that with a formulae now. Same thing here. We're going to just point and click, point and click. So we are in cell DM14. We will select equals, point to the 4,583 and then select minus, point to the 284 and select minus, point to the 66 and select minus, point to the 720 and enter. Is that what I got before? Let's double check it and see if I did the calculator right. Alright, it's off by rounds. Rounding. That's rounding. It's correct. So there we have that. Now you might be saying, hey, there's an easier formula than that. And we could have implemented the sum function in there somewhere, and we will do that next time. But if we can always do that formula, the point and click all the way through. And the Social Security method, then we have the employer portion to remember. We're going to break this out separately, and that's just going to be the same as the Social Security and Medicare for the employee portion. We'll have to record that twice. It'll make sense once we do the journal entry, or more sense, possibly, hopefully, once we do the journal entry, unless it makes complete sense now, which it probably doesn't. And then we're going to say that is the 284 and the 66 matched by the employer as the employee. So it's basically what the employer is paying on the employee's wages. So now we're going to jump back and look at the data for Erica in QuickBooks, and then we'll be back over here and put that into Excel. Here we are for Erica Robertson, and then we got the hourly wages here, and so we got 20 rate, and the hours are 40 hours. That will give us the $800. We're going to save the same type of withholdings, meaning we're going to take out Social Security, Medicare, and federal income tax. If we were to do those calculations, first the federal income tax is here. Again, that's going to be, we're just going to give that number because it's the most complicated one. You need tables. It's a progressive tax rate. Not as easy to calculate, but if we have a computer to look up those tables, that's the best way to go. But we can also look it up with a table and marital status and exemptions and pay period of a month in our case. Then we're going to take the Social Security, which was the $800, more of a flat tax. And we just multiply that times 6.2% or 0.062. So times 0.062. And that gives us 49.6. So that's good. And then the Medicare, same flat tax. We're going to take the 800 times 1.45% or 800 times 0.0145. That gives us the 1160. Those same amounts then are also in the company portion over here. We got to pay another 49 matching the Social Security and another 11 matching the Medicare. So we'll put the same information into Excel. Note the net check is $628.80, even though Erica earned $800. That's how this process will work. Once again, note we're not taking out any state taxes, just the federal taxes, and that we don't have any other withholdings, which we could possibly or not possibly have, because it would be up to the company and the employee and employer as to whether we deduct things like 401k plans and Medicare, Medicaid, and those medical insurance and those kind of things. Back to the Excel worksheet. We're first going to calculate the earnings here. We're in DI-15. DI-15, we're going to say that equals, and we'll put the $20 rate times 40 hours and enter. So there's our 800. We're going to calculate Social Security. More of a flat tax, so we're just going to take that $800 times 0.062 and see if that does the trick. So we're going to say this equals that 800 multiplied by 0.062, and I'm going to select tab, and $50, is that what we had? Yeah, that looks about right. We're rounding here, we're rounding. And then we're going to say this equals, once again, Medicare is a flat tax of 1.45. We're going to say 800 equals the 800 times 0.0145 or 1.5%. Then we'll select tab. And then we're going to have the federal income tax, and that, once again, with the table, is a bit more complicated of a calculation. So we're going to put that in as a 110. And then we've got the net pay, which will be the 800 minus the Social Security of 50 minus the Medicare of 12 minus the income tax of 110. We will use the sum function this time. We'll do it a little bit different. You might be thinking, and it would be a good thought if you were, that we could just copy this down, but we want to use a bit different of a formula and just do the calculations in order to get the calculations. And this time, we're going to say that. Well, let's do it in a calculator first, just so we don't, sometimes it's easier to see that way. So it's just 800 minus 50 minus 12 minus 110 gives us 628. So let's do that here now. Let's use a formula to do that. We're going to say this equals 800 minus the sum of, double click the sum. So note we're using the sum function but not summing up the whole column. We're just using it in, this number minus the sum of these. And then we'll close up the brackets, and that's it. So it's a bit more sophisticated of a formula, but any formula will work. I mean, this formula will work just fine. So then we're going to bring over the same Social Security and Medicare. So for the employer portion is going to be kind of like, you can think of it as matching. It's not really the same as a 401k plan in the way it works, but the matching can be thought of as much the same. So then we have that, and now we're just going to sum these columns up for the totals. We'll say equals the SUM, double click the sum function and highlight those, and I'm going to select tab. Then I'm going to do it again, equals the sum, and now I said shift 9, and then I'm going to highlight these. Next I'm going to do it all with keystrokes, not with any mouse here, so we're going to say if you can do that, it's a little bit faster, it's more geeky, which is better. That's better. And then we're going to go up one, hold down shift, and go up again, and tab. Let's do that again, equals sum shift F9, up arrow one time, then hold down shift, select the up arrow again as you're holding down shift, and then enter. And now we'll do the autofill across, which we could have done from the beginning, but I'm just going to want to do the sum function a few times. If we copy this across, it should just autofill. So if we put our cursor right so it looks like that, not like that, but like that, not like that, but like that, and copy that across, and then it should sum up. And then we should double check it just by double clicking any of these, and there it sums it up. So that looks like what we need it to be. Now we're going to do the journal entry. So if we scroll back, I'm going to scroll all the way back and look at the accounts we may need to be working with, and then we'll be right back here and pick up the numbers that we will need. So let's scroll all the way back, and I'm just holding down the left. We're taking a scroll all the way back, and let's just think of the accounts that we're going to need within this register. If this was a very simple type of journal entry for taxes, if there weren't all these laws that made us withhold taxes and whatnot, you can think of the most simplified journal entry would just be, is cash affected? Yeah, we're paying the people we told them to pay. We can think of like we shook hands and we said, hey, we're going to pay you so much at the end of each week. And now the end of the week's here and we're going to pay you some of our cash. So the cash has a debit balance and we're going to do the opposite thing to it, which would be a credit. So we would just copy the cash, we'd put that on the bottom. I'm going to skip 2 lines and put it 3 lines down because it is going to be a bit more complicated than this simplified scenario. Right click and paste 1, 2, 3. We'd credit cash, and then the debit would of course just go to the expense of us using or hiring someone to help us, and that's going to be payroll expense. So if we scroll down, we see payroll expense. That would be the expense, and we're going to copy that. It's an expense like all other expenses here. It has a debit balance, and it typically only goes up in the debit directions. The employees get paid by us. They don't pay us, and therefore it only goes up in the debit direction. So we're going to copy the payroll expense. Scroll back up. This will then be the debit, payroll expense, and that would be the simplified version of this journal entry. We would just say, this is what we agreed on paying you, here's what we paid you, and here's our cash going down for what we paid you. But in this case, of course, we need to withhold, and therefore we're going to have the added problem of the payroll liability, which will be those things, those items that we are withholding from the employee to pay at a later time. So we're going to call those payroll liabilities. It could be called payroll taxes as well. That we're kind of matching the terminology that QuickBooks has in the payroll liability. So we're going to copy that. QuickBooks will group up the taxes and the payroll items. And then we'll right click and paste 1, 2, 3. Now, you would think that would be it too with the complications, but that's not quite it either, because that only accounts for the employee stuff, and we have the employer portion that the employer owes taxes on the employee's wages, and that's going to be another Social Security and Medicare. So that means that we actually owe more money, and we're going to say that we would call that, typically I would call that payroll tax expense, but we're gonna copy QuickBooks again that just groups them together. So payroll expenses means both the wages to the employee as well as the employer portion of payroll taxes. And so we're going to copy that again. It's an expense. We're going to debit it as always. I'm going to put that in another journal entry so that we see that separately. We're going to paste that, right click, paste it in V9. And then we're looking for, then we have the other side of that then will be the liability. It's going to be what we owe also to the government for payroll taxes. So that's going to be payroll liability in AJ17, right clicking and copying. And then we will put that in V10, right click and paste. That's what we have then. We're going to scroll back up to the top. We're going to freeze the panes and scroll over to our numbers and pick up hopefully the correct numbers for this journal entry. So we're in AJ1. We're going to go back to the View tab up top. We're in the Windows group. And we will freeze the panes, and that will lessen the pain of the calculation. Scrolling to the right as the screens are saved, the screens are not moving, and frozen. That is, screens are frozen. Scrolling to the right, and we're looking for the payroll items that we have been working on. We see them in DH, columns DH to DO, DH to do. And then we're going to scroll down. We're looking at these items here. Now, what we're going to do here now is not break this out by check, but because we already have the detail here. This is our detail. So we could say that we have to we have to do two sets of these for each employee. But that would take more time. We already have it broken out over here. So what we're going to do is combine this information, just pick up the totals. Important to know that because that's one way that you could pick up the payroll and enter it into your system if you have a third-party payroll person or payroll company. doing the payroll for you, which even if you don't have a lot of people, might be worthwhile doing. We still need to know the journal entry so we can put that into our books, and somewhere someone needs to, at least the CPA firm at the at the end of the pay period, needs to know how to do that. So then we're going to say that the payroll expense is going to be that $5,383. So I'm just going to say it equals that $5,383. And then the check that they're actually going to get is just going to be the net pay, $4,141. I'm going to make it a credit. So in cell X7, I'm going to say negative of that number. And then, of course, the difference between those two is going to be these. It's going to be the Social Security, Medicare, and net pay. So I'm going to pick up the sum of those, but I need it to be a negative. So I'm going to say, instead of equals, I'm going to say negative SUM, double click the sum function, and we want to pick up the Social Security, the 334, the Medicare, the 78, and the income tax of the 830, and enter. So important thing to note here is that the payroll expense, and this isn't the tax portion, because the tax portion is broken out. We would, whether we break out the payroll taxes or not, QuickBooks, like I said, uses the same account for payroll taxes as payroll expense and puts them all in the same account. But even if we weren't doing that, this would all be payroll expense, meaning this is what the employee actually earned. It's all theirs. This is all their money. But we're only giving them that. And the difference, of course, is still what they earned. They still earned this. They still earned that money, but they are obligated to pay it for taxes to the government. The government, not trusting that they will do so, forces the employer to take it out of their check. So really this amount, this whole $5,383 is earned by the employee. And even though they're only getting $4,141, the difference here is still theirs. It's still their earnings, which they are obligated to pay to the government, and it's only the business's obligation to be the enforcer of them making their payment to the taxes. Then we have the employer portion. So here's going to be the employer portion. That's going to be these two items. So these are going to be items that the employer pays on top of the total wages earned of $5,383. These taxes here are not on top of the total wages. This is the total wages earned. These are on top of the total wages. These are the actual employer taxes, which QuickBooks puts into the payroll expense, lumps them all together, and they probably should break them out, but this makes it a little bit easier. So, in some ways. And then we're going to say equals the sum of these two, the 334 and the 78, and enter. We'll make a credit for the same amount. So that's what we got. So this two, I'm just adding up those two. If I did that too fast, just the 334 and the 78 is the 412. There are our journal entries that we have now journalized in the general journal, and we can now post them if we go back to our information by clicking just to the left side of the frozen panes and then going right a few times. We will then see the trial balance. We're going to post this line by line, starting with the payroll expenses. So the payroll expenses are here. They will be down in the bottom of the trial balance. So the payroll expenses are way down here, fourth to last account. And so it's going to be the fourth to last account on the general ledger as well. Let's go find it. We're scrolling right, taking a scroll. We see the assets first, then the liabilities, then the equity, then the income, and then the expenses. Looking for payroll. Looking for payroll. Going the wrong. Oh, there it is. I was going the right way. Just doubting myself. All right, so we're over here in. Oh, now I went too far. Now we're here in BS15. BS15, and we want to pick up this 5,383. So within BS15, we're going to select equals and point to 5,383, bringing the number up to 5,383, which we should find on the trial balance as well. Let's go back to the trial balance, double check that that is indeed the case. I'm just scrolling left to find the trial balance, and probably could have done that faster, but there it is, 5,383. Now we're going to post the other two pieces. We're going to go to the payroll liability. It's a credit. Payroll liability is right there in AK17. And it's like, I don't know, what is that, the fifth liability account, and therefore will be the fifth liability account in the general ledger. Let's go find it. Assets, liabilities, payroll liability, and we are in BD17. BD17. We're going to say equals and pick up that 1,242. Let's do that now. We're saying equals. We're picking up that 1,242 and enter. So there's the 1,242 in the payroll liability. Scrolling back to the trial balance, we should see that here as well as we do right there. And now we just need to put the checking account amount that is here. That's going to be the first account on the trial balance, and of course our favorite first account on the general ledger. We are over here in AN17. That's AN17, AN17. We're selecting equals and pointing to that 4,141. Enter. Bringing the balance down to 99,212. That also found in AK5. And we should be back in balance now. There, we're back in balance. And our net income has been affected by this payroll expense. So it's going down quite a bit. Payroll is going to be our big expenditure. So there we have that. Now we're scrolling back up. And note that, of course, that is still income. It's not a loss. It means that that's a credit, meaning the credits of revenue are higher than the debits of expenses. Scrolling back up, we're now going to post the payroll expenses. So second part of the second journal entry, payroll expenses. And we recall that the payroll expenses are down here. It's going to be the fourth to last account, as it is on the trial balance in the general ledger. Let's go find it. We first start off with the assets, and then we have the liabilities, and then the equity, and the expenses. And we're looking for the payroll expense. So let's scroll up to the top, and there it is. Payroll expense. We are here in cell BS16. We are in cell BS16, and we're going to select equals and point to that 412, bringing the balance up from 5,383 by 412 to 5,795. Let's see if we can find that 5,795 on the trial balance as well. Scrolling back to the trial balance and down to that amount, we see payroll 5,795. We're out of balance by 412. Let's record the second side, which is the payroll liability. That is, once again, right here, fifth account down in the liability section. We're going to scroll back over. Here are the assets. There are the liabilities. We're looking for the payroll liability. We are here in BD18. BD18 equals, pointing to that 412, bringing the balance from 1,241 up by 412 to 1,645. Let's find that 1,645 on the trial balance and see that it is there as well as it should be. We see it there as well as it should be. Scrolling back down, we are in balance, debits equaling the credits. We have net income of 2,367. That is credits minus the debits, credits winning, revenue winning over the expenses by net income of 2,367. Okay, so let's unfreeze the panes. Let's take a look at the financial statements. We're going to point some of these numbers to the financial statements, see if it has been updated automatically as it would in accounting software. And so we're in the View tab. We're going to the Windows group within the View tab, selecting the freeze panes, and we will unfreeze the panes because we no longer need to post. We're going to scroll all the way over. We're going to take a scroll. Well, let's first, before we scroll, let's see which accounts we want to point to here. We did something to the cash accounts. I'm just going to point to that over there. And we did something to the payroll liability account, so we will point to that over there. And we did something to the payroll expense, and we'll point to that. That should be good. That's enough pointing at stuff. So now we're going to go to the right, take the scroll to the right till we find the financial statements. Scrolling right, looking for the financial statements. Here we have it. We've got cash there, and we have the payroll liabilities. Looks like it's updated. Our total assets still equaling liabilities and equity, as this is updating automatically as it would in financial accounting software. We see that the income statement has been adjusted for the payroll expense, which is a fairly hefty expense that we have here, making the net income go down to $2,367. Still income at this point. We have that same amount, $2,367, on the statement of owner's equity, part of the ending balance of $146,542. That found as well on the balance sheet. Note, if you're looking at a problem, a different problem, it might be calculating 2 months here, January and February. So this is just February. So that is the difference if you're looking at a problem seen at a QuickBooks problem, just seeing the 2 months versus the 1 month.